Happy Friday on the National Real Estate Cafe with Don Getling and Gino Fronte for your daily dose of real estate market updates. And let's give you an idea what happened this week. And Gino, you have the crystal ball?
I do, and boy, is it working well, Don. If you look at this chart, you might remember a couple of weeks ago we said, hey, this best number in 15 years, it won't stick around. You're going to see a blip up, is what we said.
That's right. We said it probably had to do with the new jobs created for the holidays. We said, oh, I think we're going to see a bump up. And so this was another reason. This next slide is saying, here's why we felt there'd be a bump up as well, is that there's a lot of jobs being lost in the oil industry.
Already. Think about how quick that happened. Oil dropped and immediately jobs are being lost. So over the next few weeks, we're going to continue to see an impact of job loss from the oil industry.
That's right. 200 oil rigs have been closed. That's 350 people per oil rig. That's a lot of people already losing jobs. So we said, expect the initial claims to bump up, and here's the next slide.
Boom!
Ta-da!
Right back to that 300 line. So I don't expect it to go too much higher, maybe 310, 320, 315. I don't think it'll go any higher than that. I think we just start to normalize again against 300 because as gas has become cheaper, we're going to create jobs in other industries that should make up for some of the gap of what we lose in oil.
Yeah, consumer spending is supposed to be up, but actually hasn't been so much. Bottom line is, pay attention on a daily basis so you know what's going on. You would not have been surprised by this report. So how's that affecting our interest rates? Well, actually, interest rates weren't affected by that as much as it was about Greece.
Yeah, Greece is starting to it's starting to become clearer, right? So as fear leaves the markets, what happens is that money goes to more risky investments. And something that was sight unseen is that Microsoft and Apple this week issued large bond issuance. And most institutional investors feel that Apple and Microsoft are actually just as safe as treasury bonds or mortgage-backed securities. So you've seen money come out of public entities and into private entities affecting interest rates.
That's right. So right now, we've had a pullback on interest rates, meaning they've gone up a little bit. But make sure you stay tuned on a regular basis, and we wish you a very happy Valentine's Day, unless you're this guy trying to dodge a bullet. Have a great weekend. We'll see you next week.